folks. Despite Jerome Powell not cutting rates and crypto stagnating as well as altcoins retreating, big CFOs and also the SEC has hinted at huge crypto growth in the future. And we will discuss that, but let's actually look at the chart first a little bit just to see where we are right now. As you can see, right now, the MACD has gone very, very much negative, and I do expect a retrace, maybe to 112,000, maybe even to as low as 105 in the coming days. If we retrace to 112, I expect alts to lose another 10%. If we go all the way to like 105, I expect them to lose somewhere around 20%, possibly slightly more. Not the best news in the world, obviously. But the good news is the 50 and the 200 MA are staying apart fairly wide. They're not like closing the gap like they were back in February. There is nothing like the announcements of big tariffs to suddenly crash the market. So I don't really see a big shift in that direction. But however, the MACD turning negative, I expect us to go sideways for at least a few weeks, if not a month or two more, until we get to the fall. And that's where the charts are actually pointing. Bitcoin dominance is at 60.9 according to CMC, 61.7 according to TradingView, and I expect it to get up to about 63, 64 before we start running again. There's some good opportunities when it's really, really low to buy some alts. Now let's actually look at the story right now. So the SEC has announced a big Project Crypto, and they want to bring all the stocks on chain. Now, will that actually help our crypto coins? Maybe, maybe not. We know that Kraken is already starting on that with Solana. Maybe it'll help Solana, but we haven't really seen Solana actually react to the price. And just because they're bringing them on chain to either Ethereum, Solana, or whatever, doesn't necessarily mean they'll help the price of the coin. But it will actually drive FOMO. And because it will actually drive FOMO, I can actually be pretty optimistic about it. The announcement comes amid a surge of interest in tokenization, the process of issuing digital representations on a blockchain of publicly traded securities or other assets. SEC Chair Paul Atkins discussed the importance of preventing crypto companies from being driven offshore by one-size-fits-all rules. I definitely agree with that. So they debuted Project Crypto, an initiative to modernize securities rules and regulations to allow for crypto-based trading. There is an entire huge write-up on the SEC about what they're actually doing. Basically, they are obviously ditching Gary Gensler's approach, and they want to make regulations better to bring everything on chain. They want obviously America to be the leader in the digital finance revolution, and they've directed the commission staff to update antiquated agency rules and regulations to unleash the potential of on-chain software systems in our securities markets. They are also in the process of replacing the Howey test, because the Howey test was written back in the 30s and it is quite antiquated for the markets of today. And of course, federal securities laws have always assumed the involvement of intermediaries that require regulation, but that does not mean that we should impose intermediaries for the sake of forcing intermediation where the markets can function without them. So cutting out some of the middlemen. They also want to make regulations on especially crypto securities to be a lot more loose, so companies will actually come back in the United States to do their business. This announcement comes amid a groundswell of investor interest in tokenization, or RWA, or the process of issuing digital representations on a blockchain network of publicly traded securities, real-world assets, or any other form of value. Holders of tokenized assets don't have outright ownership of the assets themselves. BlackRock CEO Larry Fink has said he sees the tokenization of every financial asset as an important step in the technological revolution of financial markets. Now, I don't really know if I see the tokenization of every financial asset in this manner, but I do actually believe, tokenization of a lot of it is very, very important. He also wants to create some so-called super apps, such as Coinbase. Coinbase's super app that they announced a few days ago, where they wrap all their services up into one, and that's going to be one of his priorities. So crypto is actually going to be one of Paul Atkins' priorities. His obviously big priorities are replacing the Howey test, making securities regulations easier to comply with cryptos. Obviously, he didn't really say anything about weeding out scammers and such. But I think all of us have kind of gotten the memo at this point that the crypto industry is going to be a little bit like the wild, wild west for the next 3 years, because that's really the only way they can actually get a lot of these crypto companies back into the United States. They don't want to deal with burdensome regulations. And obviously, they're stripping down the SEC, especially the crypto enforcement division. So there's not going to be a lot of enforcement. I doubt they're really going to enforce with meme coins or any of that stuff. So you will have free reign to trade your crap coins. Atkins has also said the Trump administration will work to prevent innovative companies from being driven offshore by burdensome regulations. Like I said, in other words, no regulations whatsoever, except for like some kind of like small, weak framework. But I don't think they're really going to prosecute everyone. The proposal comes one day after the president's working group on digital asset markets released a long-awaited report with recommendations for the SEC and other federal agencies to build a framework to boost U.S. dominance in digital asset markets. Atkins said he has directed the SEC's crypto task force, led by Commissioner Pierce, or Crypto Mom, to work with other parts of the SEC to implement the working group recommendations. So what this means, it means obviously there's going to be more ETFs, there's going to be more crypto projects. You might get a 24/7 stock market, which would be a huge, huge change of what we have right now. You're going to have a lot of scam coins, a lot of rug pulls that are not going to be prosecuted. But with that, you also have the potential for some really, really high blowups in terms of price, both for legitimate projects, or what we call legitimate projects, and for meme coins, because these rules aren't really going to be enforced, and people will obviously take advantage of that. And since people will take advantage of such things like that, there's just going to be more opportunities for financial gain and financial losses, obviously, that are going to be abound in this market. So look for a lot of innovation, a lot of new projects, but of course, there's going to be a lot of people selling snake oil as well, because there's not going to be people actually looking after them and really prosecuting them to any real sense. So that might suit some of you, that might not suit some of you. I think like public trust in crypto is really not going to be super, super high, because I expect a lot more scams to come out of this. But I also expect some people, especially the more gambling type, to become more interested in altcoins, because they're not going to be regulated as heavily, and those kind of big drops and dips and rises will become more common. So it's kind of like, a double-edged sword. And it's not one that I hate, but I don't really think you're going to get like massive, basic retail interest in crypto unless there is a huge, huge bull run, which we definitely could be building up towards. But I think overall, for those of you that like volatility and like bull runs, and obviously the following bear markets, this is a very, very good opportunity for the next 3 years. And it might be the last 3 years where you have huge amounts of volatility and variability before serious rules come in. Because I don't really think like they're going to hammer out some of the clarity stuff, but I don't think like serious rules and tightening regulations are really going to hit in the next couple of years. The other thing is 99%, almost every CFO plans to use crypto long term, but only 23% in 2 years. But right now that number is like 5 or something. So 23 is a big expansion. And that actually does mean that crypto financing is going to become a lot bigger. So that obviously is good news for the crypto industry. This is a Deloitte survey that shows 99% of CFOs at billion-dollar firms expect to adopt crypto long-term, with nearly a quarter planning integration within 2 years. So most companies and their financial heads do expect crypto to become a big part in the next couple of years. Obviously, I think it would be better if you asked for the next 5 years, because that would give me a better gauge. So cryptocurrency is becoming a financial planning priority, with 99% of chief financial officers at billion-dollar firms expecting to use it for businesses in the long term, according to Deloitte's Q2 2025 survey of CFOs. The survey conducted among 200 CFOs at companies with over $1 billion in revenue revealed that 23% of their expected treasury departments to use crypto for investments or payments within the next 2 years. The figure climbs to almost 40% among CFOs at firms with revenue of more than $10 billion. Despite the momentum, finance chiefs remain cautious. Concerns about price volatility top the list, with 43% of respondents citing it as a primary barrier to adopting non-stable cryptocurrencies like Bitcoin. So obviously, Like volatility, they're still very concerned about. But I think when they say crypto, I think they're really looking at Bitcoin because Bitcoin has definitely become less volatile. And obviously, like with the ETFs and everything and some like big company and governmental influence, I think they're getting less afraid of it. If you look at the barriers to crypto, there's price volatility, obviously. You have complexities around accounting and controls. So I think they'll solve a lot of these accounting problems with regulation. Lack of industry regulation, that is probably not going to be much better unless they're looking for a really loose regulation. Then it will get a lot better. Security, obviously, there's crypto hacks every day. That obviously doesn't help the industry. Lack of internal expertise. There are a lot of people that are well known in crypto. It could definitely be hard to find them, however. Liquidity, obviously, you're going to be looking at USDT and USDC for that. Tax considerations, I do think the tax regime is going to get a lot simpler over the next couple of years. And only 1% don't really have any real concerns about investing in cryptocurrency. But despite all the concerns, they are actually planning this in the next 2 years. And I definitely think that, this is the article, they are planning it in the next 2 years. And that shows great promise of growth for crypto. So we might actually break out of the 4-year cycle if a lot of these CFOs put their company's funds in crypto in that time period. Respondents at organizations with revenue of US 10 billion and up are even more likely to tick the box, the report said. So bigger organizations are even more likely to tick the box, and obviously that's good for us. Nearly 1 in 4 said their finance departments will likely invest in non-stable cryptocurrencies over the next 2 years. Adoption isn't limited to investing. Stablecoins are also gaining traction. For payments, 15% of CFOs said their companies are likely to accept stablecoins within 2 years, with that number hitting 24% among largest firms. So about a quarter. Now that's billions upon billions of dollars kind of like hitting our market. And obviously, like that's going to impact a lot of the so-called utility chains, but we also mustn't forget that some of them are probably making their own private chains. Just because they're adopting blockchain doesn't necessarily mean they're adopting any kind of cryptos. And remember, transactions on chain a lot of times don't equate to price. You can just look at Hedera in the past for that. You can also look at all these coins with partnerships that never actually went anywhere. So we have to make sure like how they're actually buying the coin, if they're actually adopting it, and if they're buying the coin and how they're actually using the coin. If it's just for transactional gas fees, it's probably not going to move the coin too much. But if they're actually holding it for some reason, decreasing the supply of the coin, that's a different matter altogether. So obviously some of them are going to be in investing, but outside of investing, like it is going to be stablecoins because stablecoins are actually gaining traction for payments. 15% of CFOs said their companies are likely to accept stablecoins within 2 years. So note for like all the payments, cross-border and all that stuff, everyone is talking about stablecoins. No one is talking about like these so-called cross-border cryptos like Telecoin, XRP, XLM and such. Stablecoins, if crypto gets adopted for that, will actually be the standard. And there won't really need to be a bridge currency, obviously, because you're using the stablecoins as the bridge currency. And the stablecoins are pegged 1-to-1 with any country's national currency. So there's really nothing that needs to go in the middle. So privacy and payment efficiency were top drivers, with 45% citing customer privacy, and 39% highlighting faster, lower cost cross-border transactions as key benefits. So they're essentially tying stablecoins directly into the cross-border stuff. They're obviously looking at blockchain-based assets for operational movements. I think this actually falls into the category of using the blockchain and using the coin as the gas fees. You would need like a lot of transactions for this to matter for price. But some activity on the blockchain might give you bragging rights, and bragging rights might actually be enough to inspire a FOMO during the bull run. So if you're looking at the purposes of why people want to adopt blockchain, obviously supply chain tracking is number one. That's kind of VeChain's area, but I'm not really sure how big VeChain is in that area right now. Cross-border transactions, that's mainly stablecoins, 47%. Hedging is 44%, that's financial. Capital raising is 42%. Now, I'm not a huge fan of this capital raising thing because that generally means that companies are trying to sell you a coin to raise money without actually giving up control of their company or shares of that company. So that is very likely to be a scam. So there are some internal conversions that are already underway in this market. And obviously you have the front runners already adopting some kind of having some kind of crypto adoption in the space. About 83% of institutional investors plan to boost their crypto exposure in 2025. Those are the ones that are already invested. So, I think they're essentially talking about Bitcoin when they're saying boosting their crypto investments. That's why I'm really not afraid of Bitcoin essentially like shrinking back, but it's not the same for altcoins. Among the altcoins like XRP and Solana did emerge as top picks among respondents, while the majority said they expect to at least allocate 5% of their portfolios to digital assets this year. But realistically, I do think the institutional investors that are investing, like if you look at the percentages, like something like 90% is Bitcoin. Some of these smaller coins might actually get some scraps. A lot of these smaller coins will probably benefit, especially the ones that are actually getting ETFs later in October. But that's why I'm thinking Bitcoin will be pretty stable. And then like the altcoins that actually get ETFs will probably boost a little bit in October as they get their own ETFs for people to actually buy. We'll have to see how that actually all works out. And but that's why I think that crypto usage, adoption, and prices will go up in the future, despite the 4-year cycle. And I don't actually think the 4-year cycle is going to hold past basically the end of this year. We might actually get a pump early next year because Powell is stepping down. And if we get a pump in March or April of next year because interest rates suddenly got a cut because of Trump's guy, or like in May, then the 4-year cycle is actually broken. But I think even if it's broken, you can actually look at like how many CFOs saying they're adopting the SEC's Project Crypto, and I think that will raise the price over the next several years. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.